Hello everybody, my name is Christian Charlo. Welcome to your market report. Today we're Thursday, August 13, 2015. The situation of the market today, folks, I would say it's kind of tough. We have markets that are still remain stuck within that triangle formation. This is a triangle formation I'm talking about on the S&P 500, on the NASDAQ, on the Dow Jones, and the same thing too as well on the TSX, where we have this kind of a bearish triangle formation. However, it's tough to say what's going to be the next direction in the market, because if we take a look at the situation here for the past couple of days, they are all indices. By putting more data on the chart, we've seen that we have had no 2 days where we had a clear direction on the downside. For instance, we started a bearish momentum 2 days ago, but we saw that at the end of the day, we finally had a rebound in all this decline. We have erased all this decline in 2 days. So this is actually a situation where investors are looking to see what's going to be the next drivers that could actually allow the markets to start a new cycle. All eyes are on the Fed to determine what is going to happen. Will the Fed raise interest rate? And let's say if they do raise interest rate, we could expect a slight pursuit of the bearish momentum on the markets. But so far, as long as the Fed doesn't make any clear statement, so far there's nothing that could allow us to predict the next direction on the market. However, I want to highlight here a couple of sectors that are, first of all, weak, and other sectors that are standing out on the upside. The thing is, we have oil that is pursuing its decline. It's getting at the low of its downward corridor. The fundamentals for the oil sector is still negative. The thing what's happening is, first of all, we have an excessive supply, not enough demand. But technically speaking, looking at the oil decline though, we see that we are at the end of this bearish corridor. So technically speaking, it's really likely with an oversold situation like this that we might see some buyers that might get in oil to allow oil to get back towards the top of its downward corridor. The fact that we have that, the fact that oil, we don't believe that with so much days of declining, doesn't have much room to go on the downside. We think that today, even if on the Canadian side, there's the energy sector, which is in a bearish cycle, in terms of the breakdowns in that sector, we don't find that they have a lot of quality. For instance, a stock like Canyon Services Group, a clear breakdown indeed, but a stock that has been declining for so much days, why would you short it right now when we had several opportunities to short a stock like Canyon Energy Services when it gave all those selling signals? So this is actually a situation where we're kind of getting too late, and those new breakdowns that we have in the energy sector are actually lagging. The thing that will be more, well, I will feel more comfortable to recommend additional short positions in the energy sector will be if ever we could see oil, I'm talking of USO, get below this downward corridor. So far, it's just testing it, and you have to remain cautious. If we take a look also at another stock, Canadian Oil Sands, another breakdown there, another major cap, but Canadian Oil Sands, technically speaking, yes, it's good because it's breaking on important support. The thing is, we're totally oversold. So even if the decline continues, do you have a lot of room to go before you reach this oversold situation to allow you to make a 10% at least on that short positions? Not so much. Also, the stock is already losing 6.96%. So therefore, your exit point will be at 753, which will be more than a 10% loss potential. And in terms of the downward potential, you see that we're close to the oversold situation where a rebound might happen. So if you're shorting that stock today, you see that you don't have a lot of room to allow you to make some money on that short positions. On the US side, the energy sector is weak, but so far not as weak as the Canadian side. On the energy sector though, on marketgurus.tv that you can have access for free for 10 days just by clicking at the link below of marketgurus.tv. What we have done on marketgurus.tv is we have published a list of stocks that are near breaking downs. So marketgurus.tv, as I said, just click the link below this video. You'll be able to see it. And we have ROWAN companies that could break down if it goes below 1625. Atwood Genetics, I just want to see the stock going below 1864, below that bottom that it reached on August 6th. That will be a clear confirmation of a bearish momentum. But even though we still see that those stocks, all those energy stocks, well, actually Atwood Genetics will be way better because we actually at the top of this overbought situation, and we have some room to go on the downside. So definitely, if it goes below 1870, that will be an interesting situation to short that stock. Now, is there a sector that is standing out on the upside? What we have done in Market Gurus.tv, we have recommended several buying signal on the consumer staples sector. On the Canadian side, it's a sector that is standing out, and I think that today, those of you who want to build a more diversified portfolio, especially if ever we have a pursuit of the correction, which is the view that we maintain on Market Gurus.tv, while then having some exposure on the consumer staple sector, it's a great alternative. So we have George Weston that is breaking out today, Loblaw Companies that is breaking out, Cut that is breaking out, exit point on Cut 1434. On Loblaw, the trend is your friend as long as it stays above $70. There's no reason to get rid of that stock. And on George Weston, the trend is your friend. So as long as the stock stays above $110, there's no reason to get rid of that long positions. So those are the stocks that are breaking out today. They're all in the consumer staple sector. And as for the energy sector, as I said, there's a lot of weakness. However, on marketgurus.tv that you can have access for free for 10 days just by clicking at the link below, we don't feel comfortable to recommend additional short positions on the energy sector because we believe that technically speaking, oil is likely to have a rebound within its downward corridor. And if it does, it will not create enough bearish momentum among energy stocks that are breaking down today. So that was Christian Charlo from MarketGurus.tv. You can always reach us on Facebook, Twitter, chat with us, share your strategies, and never forget, the more money you make, the happier we are. See you next week.